Gautam Sinha Roy of Motilal Oswal Mutual Fund now joins us. Gautam, good afternoon. Apologies, we are coming to you slightly later than scheduled. We've had, of course, a lot of earnings. You know, some of your biggest stocks are correcting, right? The HDFC Twins, Maruti. Are you using this decline to buy into these stocks, or do you think something is changing in some of these large cap names?
No, thankfully, Anuj, fundamentally nothing is changing for some of these stocks, other than the fact that valuations which were on the richer side are now mean reverting, which is a great thing to happen from an investment perspective. So, you know, selectively as flows come, depending on the flows that are coming in, we are deploying because we don't want to sit in cash. That, of course, has no linkage with our view on the market. I think you know, the related question here is what do you think about the market? And given the velocity of the fall, given the intensity, and given that it's a global sell-off probably driven by US bond yields rising, one shouldn't be in a hurry to come into the markets is a sincere advice to investors, especially given that most Indian investors are already overbought into the markets. They have allocated significant chunks. So it's not a market that you should jump into. But yes, with the correction taking shape, definitely will get very good buying opportunities. In select stocks, there already are buying opportunities.
Okay, Gautam, hi, good afternoon. Good speaking with you after a while. In fact, you know, in your Motilal Oswal Focus 35 fund, you have a lot of market leaders that that are sitting in your portfolio. You know, whether it's an Eicher Motors, whether it's an Interglobe Aviation, Avenue Supermarts, Bajaj Finance, all these companies are market leaders in their sectors. Is this a good time, at a time when the market is falling, is it a good time to stick to not just quality names, but market leaders?
Oh yes, Sonia, it's absolutely a brilliant idea to just stick with leaders in this kind of environment, and also in financials, because you know, in an environment where bond yields have risen a lot and could continue to rise, you know, the competitive advantage of the liability franchise which these market leaders tend to have comes to the fore all the more. So I think anyways the call, the case for the market leaders was very strong. The other aspect here is that valuations of some of these companies, the relative valuation of some of these companies are actually way better than some of the mid-cap companies or the small-cap companies, which have been extremely expensive for quite some time. So I think from that perspective also, sticking to large caps, market leaders who are doing very well makes complete sense.
Okay, so Gautam, you know, too early to say, but over the last 3 or 4 days, what's been the response from retail investors who have been deploying a lot of money via the SIP route? Do you get a sense that this correction will be bought into by the domestic funds or the domestic money?
Honestly, Anuj, my sense is it won't be bought into very aggressively. I think the other aspect here is also bonds have become attractive with bond yields rising. So the differential between prospective equity returns and bond returns have disappeared. So I don't think retail money should come in at the same pace as it was earlier. Important to remember here that these things have a lot of inertia in them. So given the enormous pace with which money was coming from retail investors, it's not going to disappear overnight. That's not going to happen. It's going to come down. It might half, I don't know number, but it will come down for sure. But it will still be a very high number from a historical context, right? So that's something that we need to remember.
Okay, by the way, Lupin is cracking some more, so 7% gone on that stock. Gautam, I request you to just stay on for a tad bit. We'll come back. We still have less than 10 minutes to go for this market to close, so we'll come back with some closing calls. Hi, welcome back. We're counting down to what has been one of the most volatile trading days we've seen in a very long time. A huge slide and then a big recovery, but we're still not out of the woods just yet. We have 4 minutes left for closing, so let's just get some final calls to wrap up the day. Mitesh, what do you do now after such a wild swing either way? What should the call be for tomorrow?
Okay.
I'm afraid I can't hear you, Mitesh.
Yeah,
so I'm going to...
sorry,
Yeah,
hello?
go ahead.
Yeah, I said the idea is very clear. I think try to sell near the supply zones, or that's where the or where the moving averages on the intraday charts are placed. So 10,550, 600 is a good zone to sell. Okay. Also, I think, you know, Lupin would be a sell call for me.
Okay, some flashes on the screen will get Sapna to tell us there may be a case for indexation benefit for LTCG. need for indexation only arises in 2019 because obviously you have anyway grandfathered till Jan 31st and the tax comes into impact only from 1st of April. So the issue here is that the short-term capital gains tax, of course, is at 15%, and if long-term, if you don't have indexation and it's taxed at 10%. But that day when on the budget they spoke to Hasmukh Adhia, he clearly said that was a work in progress. So obviously the need will arise, and at some point that will be addressed. But Gautam, thoughts on this move? Do you think this has the potential to disturb the kind of equity cult that we've seen, or do you think the market will live with it? And once the global market stabilize, this would be a non-issue?
Well, people hate to pay taxes, so from that perspective, every investor will find that as an issue. Plus the cumbersomeness of filling forms and all that, the operational difficulties. But yeah, from a long-term perspective, does it really matter in terms of the attractiveness of equities? Clearly, it doesn't so much, right? It shaves off 10% of your returns. So the good thing is, higher your returns, more the shave off happens. So people will learn to live with it. Of course, the differential between equity returns and other asset classes returns comes down also. That's also a meaningful impact. I think from a 3-year perspective, that is what the major impact is, simply because we were already rich on valuations. So prospective index returns over the next 3 years was low. Bond yields have also risen simultaneously. So the gap between the two has, from a 3-year perspective, disappeared. So that's the immediate impact.
Okay, well, we just have a minute and a half to close. So let's do one thing. Let's just wind down the trading day. It has been such a volatile day of trade. We have recovered from the lows, but still the market closes, the Sensex closes with almost a 500-point cut. On another day, a 500-point cut would be huge. But just the fact that we've recovered, it looks a tad bit like it was a better day. But all in all, it's still been a weak day for us.
Yes, and for 2 days, what has worked is that if you have shorted, if you had the guts to short, looking at the global market, next day the market is rewarding you. But next day, if you're taking a short position, then you're taking to cleaners. Next day, the market is rewarding if you're taking a long position. So it's really been remarkable. By the way, the India VIX is up 26%, of course. In terms of market moves today, look at the move in ICICI Bank, for example. From the low point, quite a bit of recovery. Of course, there was quite a bit of recovery in HDFC and HDFC Bank as well. Though towards the end, there was fresh bit of selling as well. So it was all over the place. Bajaj Finance was up 4%. That was the easy list, of course, to read out in terms of the stronger stocks. Weak stocks, Lupin 7% lower, so big losses on that one. Tata Motors down 5%. Then IT stocks, HCL Tech, Tech Mahindra, TCS, Infosys, all of them were down quite a bit in today's trade, Sonia. Even in the mid caps, there was some damage, but of course, intraday there was big recovery.
Intraday there was recovery, but I don't know, the kind of stocks that recovered. I mean, Bhushan Steel was up about 15% or so. Bombay Dyeing was up about 3% Yes, we also did see some recovery in some of the, non-index large cap names. So there was recovery in Ashok Leyland, there was recovery in Jet Airways intraday. Some of these stocks, in fact, managed to even close in the green. Jet Airways up almost about 3% or so. If you're looking at other gainers, Jamna Auto was up in the green, Forgings, Orient Cement, Oil India, CCL Products, Bajaj Finance, all these stocks closed with gains of about 3 to 5%. And volumes also picked up on the when these stocks moved up. On the downside though, PC Jewelers, another day that boat has been rocked. JP Associates, IFCI, Relcom, Jain Irrigation, HCC, Rel Power, all down in the red. But Prakash, what is the view now on, especially on individual stocks? Any trades that you would look forward to tomorrow?
No, maybe I would look at something like Power Grid. Perhaps we can see a move until 198 because it looks like it's a slow down move which is being arrested here.
Okay, so let's discuss some more themes then. Gautam, it's tough to, of course, classify mid-caps as a basket, but we've had a huge rally. Last year, the index rallied 48%, and a lot of portfolios have done well. From start of January, we've seen quite a bit of damage in the mid-cap portfolios. Do you reckon more is to go, even if the global market stabilize?
Absolutely. From a valuation perspective, the case for mid-caps to fall even further is clearly there. And especially if the sell-off kind of continues, especially if the liquidity flows, which had been very robust and were chasing mid-caps, dries out a bit. So there is a case for avoiding mid-caps to the extent possible. Of course, having said that, there are always individual stocks which look good, right? So one shouldn't be completely agnostic to that, but mid-caps as a category continue to be very expensive. There is room for downside there.
Okay, Gautam, we leave it at that. Thank you so much for joining us and giving us your view. So that's a fairly optimistic view coming in from Motilal Oswal, where they say that it's a good time to be buying for the longer term. But let's tell you about a CNBC TV18 exclusive.